The Doc's new investment option.
Lead bullion.
Buy your ammunition from the Doc today at sdbullion.com.
The January 2014 Silver Shield collection is now available at sdbullion.com. 3 new coins join the series, including new strikes and sizes. First, the New Year's coin will mark the end of the Silver Bullet Silver Shield series and the beginning of the new Silver Shield series. Then, the new bullion strike, Bitcoin, graphically shows if you don't hold it, you don't own it. Finally, the new half-ounce Jesus shekel is a bullion strike that tells the story of how Jesus Christ was sold out for 15 ounces of silver by Judas. View the new January 2014 Silver Shield collection at sdbullion.com.
This is the Doc and Eric Dubin with the SD Weekly Metals and Markets. Well, Eric, last week we had Turd Ferguson back on the show, and he brought some magic to the metals markets. He was looking for the bullish rally to continue this week, and that it has. Silver especially has had a huge week, up almost $2 on the week, high of $21.50 here today on Friday, and gold up quite a bit as well. I think $60 on the week to a high of $13.20 here today. So gold's shot through that 100-day moving average that Turd was looking for. So what are your thoughts here on gold and silver's action in the big markets, or the big moves, particularly Thursday afternoon and Friday?
Great moves. We are, seeing the accumulation continuing that we've been reporting on for the last couple of months. And at this point, people are looking around saying, oh, wow, if they haven't been paying attention to gold and silver, which is a statement that's true for the vast majority of the people in the finance world, they're beginning to look and say, well, gee, maybe we miscalculated, and since this was the worst asset class to perform in 2013, perhaps it's time to step up to the plate and get a little bit of exposure. So we really do see longer-term oriented money nibbling around the surface here. We spoke about that last week in the context of how the equities were showing that the mining shares, and we see once again mining shares performing really strongly this week. I mean, as an example, McEwen Mining, run by Rob McEwen, the founder of Gold Corp, bursted some 12% yesterday and is up 20% on average for the week, Friday over Friday. And that speaks to an example of a high-quality company that people trust, in part because one of the most important things to have as an investor when you're going for gold and silver companies is to have a management team that you can trust. So the institutions and even just general investors looking around are picking up a lot of the companies that they feel are positioned very well to go forward, even if we do have turbulent times in 2014. Companies like McEwen Mining and First Majestic and a lot of other leaders that have large exposure to both gold and silver are picking up interest on the buy side. Another thing, too, that's pretty interesting is that I've been reading a number of reports today talking about all the short covering that's going on, and when you look at silver and gold's price action today in particular, we don't really see much short covering footprints. It looks more along the lines of just steady accumulation to the upside, and very strongly, in fact, particularly for silver. If you look at it, it's got like a nice 45-degree angle price appreciation chart pattern since about 1/3 of the way through the London market, and then continuing on all the way to the Access market today in Friday's trading as we record. And there's no single sharp spike in the chart or multiple sharp spikes that you'd see when short covering is happening. It looks just like a very strong continuing accumulation pattern, and that again speaks to the fact that we have returning money that is, yes, some of it momentum, but also a good part of it is just a longer-term and intermediate-term investment buying by people who realize that now's the time to get into something that's been beaten down to a pulp, and with the troubling economic statistics that we're getting out of the government and no sign of inflation, and that high prognosis of Janet Yellen possibly having to respond to those weakening economic statistics later this year, and the possibility of the bond market even rising up as well. Although right now we're getting safety trade buying from people running out of the emerging markets economies into the treasury market. But that aside, I still am sticking to my call of 3+ months now of where I see the March through June 30th period window with a high probability of when the tapering stops, and maybe even 55 million will be the last of the parking spot where tapering stops for a period, and then Janet Yellen trying to do other things, like, for example, the prime target that the Fed will likely take on is to charge, or in the very least stop paying interest for deposits on reserve at the Fed. And there's about $2 trillion or so of money hanging out at the Fed that's on deposit by just the banks, not really feeling much need to do anything when it comes to extending loans out into the economy and increasing the velocity of money. And I think we're going to see that later this year. I believe Jim Rickards actually came out in the last month talking about that very same outlook, so it's interesting that he's jumped on board with that same forecast. It actually makes me a little bit nervous because more and more people are beginning to call for that forecast, and I tend to like to be a contrarian, but at least with respect to the vast majority of the people in the mainstream on Wall Street, no one's really thinking it in those terms. So I think we're still setting up for the same kind of picture that we've been talking about for the last couple of months, actually. A very strong 2014 for gold and silver.
And it's been fascinating to see gold and silvers make their runs in the face of the taper. I think a lot of people had pretty much assumed that if the Fed were to taper, the gold and silver would really end their bull markets and really crater. But really, if you go back and look at it, the first 8-10 years of the bull markets, there wasn't any QE involved, and silver didn't have any problem moving from, say, $4 or $5 an ounce up into the 20. What was it? 21 was the high before the Bear Stearns collapse, and the same thing for gold from under 300 up towards 1,000 and over. So those are both pretty big moves, without any QE involved at all.
Also, on top of that, not only without any QE, but no mainstream realization of, oh my gosh, we're going to deflationary crash and the world is ending, and run for the hills. Because 2000 to 2006 certainly, and part of 2007 actually, we had basically the Chinese economy going berserk and taking down 90% of the world's supply of concrete and buying up natural resources all over the place. Inflation was roaring high. It was actually July 2008 when oil had hit that $150 plus price point on an intraday basis. So nobody was thinking about a deflationary crash actually in the rearview mirror. And it was, in fact, quite contrary to the kind of conditions that we see now, where gold and silver were getting lots of attention and moving very strongly. So it's funny how these contrarian things set up, but it does happen quite often.
And silver in particular, its move has been particularly strong, up nearly 5% today on Friday. It's been almost, 11 or 12 days in a row without a down day. It's been quite a run for silver. And again, this is coming on the wake of the Fed's second QE taper announcement. What was that, 2 or 3 weeks ago now? So ever since the last taper announcement, it's really lit a fire under gold and silver. And really looking back now at the call we made, I think it was like December 21st, we were looking for gold and silver to bottom in the next 10 days, and with a couple months of perspective in hindsight now, it sure looks like that double bottom was placed on New Year's Eve on 12/31, with gold touching just about a double bottom at 1180.
Reversing on to the upside on that day and continuing for the next 2 days too.
Exactly. I mean, gold's about $140, $150 off those levels now. Silver's up, I think, about $3 or $4 from those levels. So it's beginning to get a bit of confirmation here that was indeed the final capitulation, double bottom in the metals, and promising trading and things to come here in 2014.
And the end of the quarter in 2013 basically speaks to, once again, that reversion to the mean. People who had been out of the sector moving in because, in the end of quarter tax loss selling and fear of hedge funds wanting to have things or mutual funds more so, having things on their books that are going to be revealed to clients. You can imagine a mutual fund manager putting a large amount of gold stocks into his portfolio in the last month of December, only to have that reported to clients, and then the clients would be saying, "Hey, what are you buying this stuff for?" So all these kind of patterns and reversion to the mean and the bounce that we called, I mean, that all kind of fits in what you'd expect to see with a long base starting in June of 2014. I believe the bottom was the 28th of June, and then going towards the end of the year. So, and one other thing too, as we're talking about being contrarian, we should probably also throw out that it's very likely that sometime next week things are going to calm down, and then the cartel will step in and try to manage prices down and take $15 out of gold and $1 out of silver, maybe $1.50 if they're able. But that's going to be yet another buying opportunity, and keep an eye on things for you technical folks out there. Look for things like gold's RSI on a closing basis for spot to maybe hit 80 or so. It's at 72.27 right now. And if it were to go at about 80 and things kind of cool off from a buying point of view, that's exactly when the cartel has historically come in and just beaten the pulp out of it to try to do price management efforts. Because they know that a lot of people pay attention to these technical signals, and when the technical signals put out a vulnerability window, they exploit it. So I expect to see at some point next week, most likely Tuesday, we'll see some cartel attack. But it is a losing game for them. You know, they have less ability to manipulate the markets because of all of the gold that was squandered out of Western vaults in the course of last year, and the continued buying by China. In fact, other countries around the world, and as we noted last show, India is most likely going to be easing restrictions in terms of their import taxes and probably other things later on this year. So something to look forward to.
Exactly. So we had a lot of excitement throughout the precious metals community this week with the big moves to the upside. The other story that's really been developing over the past week or 10 days is the sudden development of dead bankers turning up everywhere, from London to New York to even Colorado and Washington across the U.S. There's just been a sudden string of dead bankers turning up, and numerous of deaths that have just about all been reported by the police as suicides, have rather suspicious circumstances. We had the one, I think last weekend, that was reported he suicided himself with a nail gun, shooting himself in the head and the torso 8 or 9 or 10 times, I think. And then we had the JP Morgan banker in London jumping off, what was it, the 32nd or 33rd floor balcony that he wouldn't have had access to a couple minutes after emailing his girlfriend that he was on his way home. And then we had Jim Willey updated Silver Doctor's readers this week that the strings of deaths are all related and are tied to Forex fraud. And we had another report that's really gone viral from a supposed European banker source who claims that the JP Morgan bankers knew each other and had uncovered something. And he doesn't reveal what that might be, or he probably doesn't know what that might be, but don't have too much facts other than it's pretty unlikely that, at least in some way, some of these deaths are not related.
You'd think from a statistical point of view that Lloyd's of London is going to be upping their insurance for JP Morgan's high net worth, high importance executives. You know, companies often take out insurance on their top CEOs and management team strata just because of the importance of the intellectual property and relationships that.
And just to clarify for the listeners who might not quite understand the concept, Eric's not talking about life insurance policies to benefit the families or loved ones of these employees. These are life insurance policies that if the employees die, the bank or the company.
Yeah, it protects the shareholders because if you had, oh God forbid, someone like Jamie Dimon expire, you know, people would perceive that as a very big negative for JP Morgan. I probably wouldn't agree, but in any event, so they have insurance on JP Morgan. Most assuredly, any Fortune 500 company has insurance on the top executive and a great number of lower executives as well too. But you know, just drawing the analogy of the statistical oddity, the probability of all of these bankers expiring in odd circumstances within the last 2 months seems a little weird. So there's smoke here, and who knows what the fire is, but there's something weird going on.
Yeah, we'll see if any more information is forthcoming, or the alternative investigative press is able to get anything. Obviously, the official media is just labeling everything as a suicide, whether it's 9 shots with a nail gun to your head or jumping off a 15 or 20-foot bridge that the Harvard grad jumped off of. You would think somebody with a Harvard education, if he was trying to kill himself, wouldn't jump off a 15 or 20-foot bridge.
I've heard of stories of people surviving jumps from the Golden Gate Bridge. So 15, 20 stories probably wouldn't do it with a certain guarantee that you're not going to be alive and feeling a hell of a lot of pain. So anything new on the physical front as far as inventory changes? I know you had a big day today with people jumping in, chasing momentum.
There haven't been too many changes as far as the supply. It's pretty much about the same as last week. Silver Eagles are tight with the allocation and the rationing, available within a week or two for the most part across the wholesale network. The Sunshine Mint rounds remain about a 4 to 5 week delay. But it's really fascinating just observing human psychology in the market, as early in the week nobody's interested in the metals, where there's not a lot of movement in either direction, either up or down, and silver was kind of consolidating around between 20 and 2050, not doing too much either to the upside or the downside, and nobody's interested in the metal. But once a big move begins and is in progress, everybody's clamoring over on top of each other, fighting to buy. It's just pretty fascinating to see the demand come in when the market is moving up and everyone feels like they're missing out. And really, you can really see the human emotions and psychology in play, as particularly like throughout the day today, just massive demand in buying. And then once silver kind of plateaued around 2150 and hasn't moved much, the demand kind of slowed down as the emotion. You no longer feel like you're missing out and you got to jump in before it moves to 22 or 23, and now everyone's kind of shell-shocked by the dollar move and waiting for a dip to the downside. But it wouldn't surprise me if when Asia opens Sunday night, silver gaps up again, and all those missing the bus or trying to jump on the train as it's leaving buyers come right back into the market. So just a quick recap here before we wrap the show this week. Silver up over 10% on the week to a high of $21.50 here on Friday. Gold up over $60 to $13.20. We definitely saw Turd's prediction last week that gold was going to hit its 100-day moving average. It's pretty much shattered that. For the Doc and Eric Dubin, thanks for tuning in to the SD Weekly Metals and Markets.
The Doc's new investment option.
Lead bullion.
Buy your ammunition from the Doc today at sdbullion.com.